favorable factors in the marketplace for increased M&A activity. You have significant cash on the balance sheets of corporates. There's plenty of dry powder at private equity groups. Debt financing is readily available. CEO confidence is on the rise. As a result of these favorable factors, we think that they will outweigh the uncertainties that are still in the market, and more deals will be done in 2014.
The IPO market is really hot, and the pipeline of opportunities of IPOs in process that we're seeing means that companies are looking to capitalize while that IPO window is still open. Capital is flowing from fixed income investments into the equity market, driving the stock market to record highs, which makes IPOs very attractive. Corporate sellers of businesses, however, normally would look to private sales as their preferred exit. But in this IPO market, we're seeing IPOs capture an increasing share of exits. Other advantages to IPOs include that they provide capital for companies for growth, as well as to pay down debt, while also providing liquidity to shareholders. Another plus is that IPOs provide a public currency for companies to make future acquisitions.
It's important to consider the tax issues and implications of a transaction at the very outset because tax is pervasive. It can impact the purchase price, it can impact the structure of the transaction, it can impact what type of consideration is paid. It's also important to recognize that tax is critical for both the seller and the buyer. The seller should bring tax in early so they can understand the relationship between the seller's tax basis in the business and the value of the business. If the seller has a loss in that business, oftentimes they'll want to monetize the loss by engaging in, say, a cash transaction where the consideration that's paid by the buyer is cash. That may well unlock the seller's loss and permit them to use the loss against other income. By contrast, if the seller has a big gain inherent in the business, they may well want to defer that gain. And that typically requires that the acquirer use its own stock to effectuate the acquisition. Also, the structure will be dependent on whether you're trying to do a taxable or tax-free deal. When you're on the buy side, it's critical because if the buyer can figure out a tax structure that's beneficial to the seller, it may well be able to have the same dollar level bid as another acquirer and yet still win the transaction because it's pointed something out to the seller that they didn't recognize. Also, if the buyer figures out a tax structure that's beneficial to itself, it may well be able to bid more for a target than its competition.
While our clients are opportunistic investors and see growth opportunities in lots of industries, the sectors where we're seeing the most activity are technology, healthcare, financial services, and energy. This should come as no surprise since last year's survey respondents predicted that these would be the most active sectors in the coming year. Technology companies are performing extremely well, and their ongoing innovation is driving long-term growth opportunities that are of interest to investors. With the healthcare industry responding to the regulations and changes required by the Affordable Care Act, we expect that to drive significant investment opportunities in the healthcare space. The regulatory changes in the financial service industry are also driving business model changes and changes in the way these companies are doing business, which will continue to drive interest for both financial and strategic buyers. The increasing global demand for energy in all its forms, along with new technologies and new sources of energy, mean that the M&A market for energy will continue to be very strong.
As the survey indicated, there's going to be lots of activity in 2014 in the context of cross-border acquisitions. And regardless of the jurisdiction of the acquirer, to the extent we're dealing with cross-border acquisitions, it's going to be critical that the acquirer bring in tax advisors from the various relevant jurisdictions early in the transaction life to make sure that those tax advisors are not only focusing on issues that are specific to their jurisdiction, but also that they're working with others that are on the deal team to make sure that planning in one jurisdiction doesn't cause problems in another jurisdiction.
I think the executives in our survey have it right. There are some very favorable economic factors going into the next year, including the availability of cash and debt financing. There's improvement in economic markets around the world as we see consumer spending increasing. CEO confidence is also increasing. CEOs have spent a lot of time getting the cost structure right the last few years, and now they're looking for growth. Considering all these factors, we're expecting M&A activity to increase.